one of the industry's most successful bond managers is DoubleLine Investments. But what's happening next for this big firm? Joined today by Redell of DoubleLine. Ron, talk to me, what's next?
Well, there's been a fundamental shift in the competitive landscape for fixed income investing in general since really last year. And we're seeing a lot of interest from institutional clients and individual investors and professional investors in our products. So we've been continuing to try to diversify the overall organization through different types of products. One of the things that we've done just recently, the reason we're here today, is we've had a joint venture with State Street Global Advisors through their ETF platform. And we launched that in February of this year, and the ticker on that is TOTL Total, and it's been the fastest growing active ETF this year. And so we're looking to continue to build out the ETF area within DoubleLine. We're not ETF experts, but we think we know a little bit about fixed income. So what we try to do is partner with best-in-class organizations and develop products jointly for the investors. So we plan on adding additional ETFs and going deeper with the Spider franchise. And so you'll see additional ETFs. I can't really talk about the strategy specifically, but you'll see additional active ETFs in 2016.
Do you have a number, a certain amount of ETFs you hope to launch?
Well, we're continuing to develop the business plan, but there's 2 additional ETFs pending regulatory approvals. We'll be launching those 2 additional ones. And what we're seeing is not just a phenomenon here in the US, but also a phenomenon globally of interest for DoubleLine. And we're seeing that play out also within the UCITS area. So we have a partnership with Nordea, where we launched our total return about 3 years ago, and that particular CCAV is right now $2 billion in US assets. And we plan on building additional compartments within the UCITS area. We're launching our own UCITS company in 2016. We're launching with 2 separate compartments within that space. And then we're continuing to build out the partnership with Nordea. So what we try to do is, again, try to find that partner in an area that we don't have that expertise and offer our services in sort of a joint area. So another area that we see a lot of growth is in the variable insurance area. So we've partnered with Jackson National, which is the fastest growing variable insurance company today. And we launched our total return strategy within a VIT. There's the Schiller Enhanced Cape product as well. That's a smart beta product that we launched with Jackson just recently. Right. And we're going to continue to build out separate sub-accounts within the VIT space in 2016 with Jackson National. Another area is on the collective trust side in the 401k space. We're spending some time developing new products within sort of that collective trust area with Northern Trust. And we've launched 2 collective trusts to work with the plan sponsor community and the consultant community to offer collective trust within our investment strategies. So we're continuing to build, and not only with partners, but also organically within our own strategy. So there's a lot of investors today that might be concerned with the rising interest rate environment. Yes. We've actually seen interest rates rise, not on the short end, but on the back end. And so we will continue to look to offer products that investors will see as attractive in that type of market environment. So we've launched a low duration strategy just recently, also a low duration emerging markets fixed income strategy, all dollar denominated, as well as a bank loan floating rate strategy. So we're looking to offer products and diversify the overall fixed income business within other types of strategies.
Sounds like a really conscious effort, especially when it comes to retirement, to add products in that area. Is there more to come?
Yeah, like when we started our organization 5 years ago, we started with 45 employees, and today we're roughly around 170 employees and continuing to build out the resources. One of the areas that we've built out is in the DCIO space, and we'll continue to do that. Obviously, that's a big area in the market, and we want to make sure that we can offer the right vehicles and the right share classes for that particular investment community. So we hired a gentleman about a year ago that covers our DCIO space, and working with the record-keeping platforms and the plan sponsors and the consultant community, we're trying to continue to build out that particular area.
So last question, talk to me, what's kind of the outlook for you guys 3 to 5 years from now? What does DoubleLine look like in that time?
Well, we'll continue to diversify our overall business, expand not only within fixed income, but also within equities. In our smart beta franchise, we'll continue to grow. Again, we launched a Schiller Enhanced Cape strategy about 2 years ago, a little over 2 years, and it's already $600 million in assets, and it's actually the #1 large cap value fund in the category according to Morningstar. And so we'll continue to kind of build out our equity franchise in the smart beta area. We're also entering into the commodity space as well. We launched a strategic commodity fund just recently, and that is a completely different area than we have been in the past. So the expansion in products, the expansion in different types of strategies will continue, and that diversification will build out in the long run. And from an asset perspective, we're at approximately $80 billion at the end of September. So we've had tremendous growth, and we expect that to continue in the future.
Sounds like it's been amazing, just a meteoric rise for the firm over the last 4 or 5 years. So Ron, thank you so much for taking some time to join us today, talk about all that.
Appreciate it.
For Investment News, I'm Matt Ackerman.